In this video, I'm going to tell you exactly which 5 AI stocks I'm actually buying right now. So let me give you the full AI picture that I'm looking at here. The companies that are building all the AI infrastructure right now, they're not just doing all of this speculatively. They're actually doing it because the real demand is there. The revenue's real and all of the contracts, they're already signed. Amazon, Microsoft, Google, Meta, all these big companies, which I know you've heard of, spent nearly $300 billion on AI infrastructure in 2025 alone. That's definitely not what I would call a bubble. That's more like a construction project. And here's the funny thing about construction projects. Everybody, they talk about the flashy building going up, but nobody talks about all of them little companies selling the cement, the steel, or the wiring and everything else that it takes to actually build that building. But that's where I'm looking. So the picks that I'm gonna give you now, they're not the sexy headline names that you might be expecting. They're actually gonna be the infrastructure layer. These are the companies that are gonna get paid regardless of which one of these AI models actually win. And right now, a lot of them are sitting at valuations that make a lot of fucking serious sense. Please bear in mind here, I'm not some kind of a stock tipster. I'm not a financial advisor. I'm just a trader who does his homework and who just tells you everything I'm gonna be doing with my own money. So I trade here from Bali right now, as you can probably tell. But before that, I was in Dubai, Bangkok, Hong Kong. I've done a lot. And the whole business runs completely from a laptop. That is the lifestyle that I chose because I love it. And part of keeping that lifestyle is making sure that I'm not leaving any serious money on the table because I'm too stubborn to look at new opportunities. Let me start with the one that I think is probably the most obvious no-brainer of the bunch that people are still pretty much sleeping on, the Taiwan Semiconductor. So here's something that most people, probably including you, don't know. Nvidia, they're not making their own chips. AMD, they're not making their own chips. Apple, they're not making their own chips. They do all the designing, but the actual manufacturing, that goes through TSMC. TSMC is the world's largest chip foundry. So what do? They make physical chips that power every single major AI system on the entire planet. And their management has projected that AI chip revenue will grow at a compounded annual rate of nearly 60% from 2024 to 2029. 60% compounded. Every single year for 5 years. And get this, here's the valuation angle that really grabbed me and got my attention. TSM is currently trading at around 23 times forward earning. Get this as well, the S&P trades at 22 times. So you're basically getting the backbone of the entire AI revolution at the same price as average stock in the index. Now guys, that doesn't happen often. And when it does, it makes sense for you to pay some serious attention. This is gonna be my highest conviction position in the AI space right now. So this one is a bit more technical, but stay with me because the numbers here are genuinely insane. So most people probably know Broadcom as a networking semiconductor company, if you know them at all. But what most of you probably don't know is that Broadcom has quietly become one of the most important AI chip companies in the entire world. Now, they haven't done that by competing with companies like Nvidia. What they've done is they're actually partnering directly with the biggest AI spenders on the planet. So what do they actually do? Well, they design custom chips called ASICs, application specific integrated circuits. And basically they're built specifically for AI workloads. You find companies like Google using them, Meta definitely uses them, and Amazon is actually building their own version right now. These chips, they're optimized for specific AI tasks, and they are significantly more efficient than the general purpose GPUs for them workloads. In Q4 of last year, Broadcom's AI semiconductor was up $6.5 billion, up 74% year over year. And for Q1 of this year, they're projecting $8.2 billion, which would be 100% year over year growth. Guys, 100% growth in one quarter is fucking wild. And at the end of this year, AI semiconductors, they're expected to make up nearly half of Broadcom's total revenue. This company is transforming in real time right in front of our eyes, and the market hasn't really fully priced it in yet. Now, I want to talk to you about one of the ones that I think probably has the most upside from here, and also the most risk, so it's definitely worth paying attention here. I'm talking about AMD. Now, AMD is Nvidia's main competitor in the GPU space. And for the last 2 years, the general narrative has been Nvidia is definitely winning, AMD is getting its ass kicked. And that narrative has really fucking hammered AMD's stock price. But here's what that narrative misses entirely. The AI chip market is not one of them winner takes all markets. It's a winner takes most. And that most is so enormous that even second place is pretty fucking good business. AMD's MI300 series chips are genuinely competitive with Nvidia's H100 for many different AI workloads. And also, the main part, they're significantly cheaper as well. And think about this, when you're buying chips at the scale that companies like Microsoft, Google, Meta, they're buying them at, even at 20% cost saving, it's worth fucking billions of dollars. And here's the thing, AMD is currently trading at a significant discount to where it was 18 months ago. And the fundamentals, they haven't deteriorated. If anything, they've improved, they're getting better. And this is the kind of setup I look for as an investor, a trader, a quality asset. It's been beaten down by sentiment, but it's still got strong underlying numbers. Yes, it's high risk, but also it's high reward. So yeah, fuck it, I'm in. But with a smaller position than TSM or Broadcom, 100%. So this is the one that most people haven't even thought about, or to be honest, you probably haven't even heard of it. And my personal opinion is that it's extremely undervalued right now as we speak. Next is Micron. So what does Micron actually do? Well, Micron makes memory chips, specifically DRAM and NAND flash storage. And here's why they actually matter for AI. Every single AI model runs on GPUs, but them GPUs, they actually need memory to function. Fucking exorbitant, massive amounts of it. The more powerful the AI model, the more memory it's gonna require. It's pretty simple. And as AI models get bigger and more complex, which is happening really quickly, the demand for high bandwidth memory, it's growing exponentially right now. Micron is probably only one of 3 companies in the entire world which actually makes this type of memory at the scale that it does. The other 2 are Samsung and SK Hynix, both Korean companies. Micron is the only American player in the bunch. And right now, Micron is trading at a valuation that implies the market thinks memory demand is probably gonna slow down. Now, I personally think that the opposite is gonna be true, because just look around, guys, like why the fuck would it slow down now while things are just getting interesting in the AI world? Every single AI data center in the entire world right now, they need Micron's product. And think about this. The US government is actively pushing for domestic chip manufacturing. Micron has a political tailwind on top of that commercial one as well. So yeah, this is probably my most contrarian pick, but personally I think it's the one with the most asymmetric upside in general. And the 5th one, and this is the one that surprised me the most when I started doing all of this research. I'm talking about Palantir. Palantir is not a chip company. It's a data analytics and AI software company. And for years, it was dismissed as a government contractor with a cult following and really an overvalued stock. But something changed in the last 12 months. Palantir has been aggressively expanding into commercial enterprise AI. Their AIP platform, the artificial intelligence platform, it's being adopted by every major corporation to run AI on their proprietary data. And the commercial revenue growth has been pretty damn explosive. So these are the elements that I find really interesting from an investor perspective. Palantir is one of the few AI companies that it's actually profitable right now. It's not adjusted EBITDA profitable, it's actually profitable by accounting standards. It's in a space full of companies burning cash and they're making big promises on their future returns. Palantir is actually already making that money right now. So yeah, the valuation is not cheap, and I'll be totally honest with you about that, but when you have a profitable AI software company and it's already accelerating in commercial growth and government contracts, they're not going away anytime soon. And I think the premium is pretty damn justified. Nevertheless, this is probably going to be my smallest position of the 5, but it's definitely going to be in the portfolio somewhere. So I want to address, I guess, the elephant in the room for a minute. And that elephant's name is Nvidia. I'm not going to be buying Nvidia right now. And I want to really explain to you guys why that is, because I think it's super important to those of you at home who probably think that it's a bit of a slam dunk investment. Now, I'm not going to sit here and say Nvidia is a bad company. Of course, it's an extraordinary company. Jensen Huang has built something genuinely historic. The H100, the Blackwell architecture, the CUDA ecosystem, it's all real, it's all dominant, and it's generating crazy revenue for them, undoubtedly. But here's my problem with Nvidia as a buy right now. The stock seems to be priced for perfection, and I've been trading long enough to know that when something is priced for perfection, any small little disappointment, anything tiny that goes wrong, it causes a very large move and it moves it in the wrong direction. Also, you have to bear in mind that Nvidia's competitors, they're catching up. AMD is gaining a lot of market share right now. Custom ASICs from Broadcom, they're eating into GPU demand from the hyperscalers, and geopolitical risk around Taiwan from the obvious threat from China, where TSMC manufactures all of Nvidia's chips. It's a very, very real threat to them right now. So don't get me wrong, I'm not saying sell all your Nvidia stock if you actually own some. I'm saying that for new money going into AI right now, I think the better risk reward is in the picks that I just gave you in this video. I'm talking about the infrastructure layer, the picks that win regardless of which AI model is actually in first place. Basically, instead of picking a football team to win, I'm betting on the company selling the tickets. The one that wins pretty much regardless of the outcome. That is where I'm going to be putting my money. So let me be real with you for a second about how I'm actually going to be doing all of this, because I think this part is probably more important than the stock picks themselves. I'm not going to be going like totally balls deep, so to speak. I'm not going to be liquidating all my gold positions. I'm definitely not going to be remortgaging the house for this or anything like that. What I'm going to be doing is allocating just a really specific percentage of my portfolio into this AI theme. And I'm going to be spreading it across all 5 stocks with different weightings based on my conviction level and of course based on the risk profile of each pick. TSM is definitely going to be my largest position, Broadcom second, AMD third. It's just smaller because of the higher risk, that's it. Micron fourth, Palantir fifth, and that's going to be the smallest of all. And what I'm doing here is I'm dollar cost averaging in. I'm not trying to time the perfect entry. I'm not waiting for some, perfect dip. I'm buying in tranches over the next few months, and that's just because I believe the long-term thesis, and I just don't want to be that guy who missed the trade, who missed the opportunity because he was waiting for a 5% pullback that never actually happened. This is pretty much how I approach every major position. Risk management first, conviction second, execution third. So if you're new to investing and you're thinking about getting started, even with like a small amount, something like $1,000, honestly, I'd just say split it evenly across these 5. Set it, check it quarterly. Don't be one of them people that's looking at it every single day. That's trading, not investing. It's a completely different mindset, different time horizon, and completely different rules as well. So look, guys, I'm gonna be straight with you right now. A year ago, for sure, I would definitely not have made this video. I was a gold trader, I still am, but almost exclusively back then. And my other investments, they were more, stable, long-term investments, things like real estate, for example. They're basically just a way for me to tie up cash in something that appreciated slowly over time and gave me very minimal risk. And that was pretty much my identity. And there's definitely still a part of me that feels a bit weird about talking about tech stocks right now. But you know what? I've learned the hard way over 10 years of trading, that the market doesn't care about your identity. It really doesn't care what you used to trade. It doesn't care about your comfort zone. It doesn't care about any of that. The money, it's going where the growth is. And right now, a significant amount of that growth is in AI infrastructure. Not just the hype, but the actual infrastructure that all of this is going to be running on. And don't worry, I'm not completely abandoning gold. Gold and other precious metals, they're still a huge part of my portfolio, and they always will be. After all, you still need silver and gold just for the microchips anyway, so it's not going anywhere. But I'm also not going to be sitting on the sidelines and watching the biggest capital allocation story of my entire lifetime play out without getting my feet wet. These 5 stocks, they're going to be how I'm participating in all of this. And, I just wanted to share with you exactly why, because that isn't what this channel is about. Don't get me wrong, this channel isn't necessarily about giving you advice, but it's more just an actual take on what I'm really doing with the information that I have at my disposal right now in this rapidly changing world. So if you guys want to go deeper on any of these different picks that I mentioned in this video, for sure, drop a comment below. Let me know which one you'd like me to break down in a bit more detail. And yeah, the one that gets picked the most, I'll do a full deep dive on, no matter which one it is. Make sure you subscribe if you want to see more of this kind of content. And guys, I'll see you on the next one.